Hi, welcome to Controlling Compound with Darren Mitchell. I'm your host. Joining me today is Christina Wyatt. Christina, how are you?
Hey Darren, I am doing awesome. How are you doing today?
Fantastic. We're going to talk today about our August update, let people know what's going on in the industry, what's going on in the money world. So, to start, I wanted to jump into I read this the other day and I thought it was definitely an update people should know about. They might not want to hear about it. Um, The Toronto City Council has announced that they're going to increase development charges. Now, a development charge, for those not in the real estate world, municipalities, when you finish building a place, they say, hey, that's pretty cool. Here's a bill for the municipality. We just like a bunch of money. And, parks, schools, all the things they say they're going to use it for. But bottom line, there's these development charges when things are completed. Toronto announced almost a 50% increase in development charges. Think about that. Like that's 46% was the increase in development charges. So for a semi-detached house, okay, not detached, a semi-detached, the fees are going on average from 93,000 to 137,000. There's just an extra 44 grand you're going to have to come up with. If we look at the condo market, two-bedroom condo, on average, it's going from 55 grand to 80 grand. There's an extra 25 grand that you need to come up with, unless your development fees have been capped, and we've got an upcoming podcast we'll talk about at the end about we actually talk about that, how to cap those. But massive increase. So when people talk about inflation being whatever number you want to use, well, what about these kind of things? What about a 46% increase in development charges? And these development charges get passed on to the end consumer. So that was one update I wanted to lead with, Christina. You can talk about inflation, but what's your inflation? And it's the same, with taxes, right? Like, what's your tax rate? I rented a car the other day when I was away, and it was 32% tax at the airport. And I'm like, I thought tax was like 13 or 15%. They're like, no, it's 32 at the airport. All those extra surcharges. So what's your inflation? What's your update? Well, real estate has spiked in Toronto, or development charges have spiked in Toronto. What else we can update this week, Christina?
I got another real estate update that I wanted to share as well. Not in the best of news, but something that people do need to be made aware of. They changed the rules to HELOC. So some of the traditional HELOCs that you got set up, they are now making the maximum borrowing revolving portion of the borrowing amount, the maximum they are going to be giving is 65%. Used to be 80. So there is a big difference there. Now it's not going to impact you until it comes up for renewal. But at that time, when it comes up for renewal, they're not going to let that portion, that 15% portion is no longer going to be available. So as you pay it down, and they're going to make you pay it down, it's no longer going to be available, and you're going to have to start making principal payments and whatnot towards it. So big news on that HELOC. Now, they were saying worse. This is actually kind of little in comparison to some of the things they were talking about doing with the HELOCs with interest rates up, but it's still impactful. If you've got it used, it's definitely impactful, and if you're using it for real estate ventures, it's going to be impactful to you as well.
So let me just dig into that. So you're saying if your HELOC is more than 65%, currently 80%, but changing to 65%, all of a sudden your lending institution is going to say, hey, not only do we need the interest on this, but we need a principal payment on the amount as well.
Yeah, you've got to start paying down that mortgage principal. So I'm not 100%
Wow.
sure how they're going to set it up for each individual account. I know for sure that with new HELOCs, you're just not even going to have the option at 65% max. And when you come up from renewal with your HELOCs out there that do have 80%, they're going to be having that discussion with you about paying down that portion to 65, your amortization on how long you have to pay that, and all of those. I'm thinking that's going to be on an individual bank basis, what they're going to offer. But the rule is now you've got to start paying that down, and you can only have a revolving amount of 65% versus 80.
Okay. And then if we switch to some of the key markets, stock market basically down 15 to 20%. Most indexes year to date. We've got real estate. We had a massive increase pretty much across the country in the past couple of years. We are seeing some volatility now. It is down in some markets. It's still up in a couple markets. It's flat. And really, this is almost a community specific thing because it gets into, I know in my community, there's just not enough supply. So the prices are still kind of up there. But as the supply increases, there definitely could be variations, but really mixed bag across the country. The centers that went up the most, like Toronto, Vancouver, those are seeing the ones. Some of those are seeing some price drops. Bitcoin continues to surprise me on how poorly it's done year to date, down 50%. Great long-term prospects, I think, but certainly maybe a buying opportunity for those. Not giving advice. And then gold's the other one. Gold's down 6%, and again, that surprises me. Typically, in times of uncertainty, people gravitate towards gold. So I would have expected, and I'd still expect long-term gold to go up. But again, not giving advice, but gold's actually down year to date as well. So we've got a lot of things down. We've got most things down, and a lot of things definitely volatile as well. So that's kind of the update in the markets. What about on the insurance world, Christina? Any new and exciting things we should be discussing in the insurance world? Any updates there?
No, no big changes. We announced the dividend scales were all announced the last couple months, and they're going to stay that way for another year. So we don't have changes, and most half of them stayed the same. The other half went up a bit. So infinite banking side, that side of insurance, not much to say. Not going down. It's exactly staying exactly where we say we need it to be. So that's perfect. Was going through some news, news and industry updates, and I did come across a survey that they put out that said 62% of Canadians have their life insurance through their group insurance. So that is where they are relying on their life insurance through their group insurance. And I thought, we could chat a little bit about that in our update, the differences between having group insurance and not having your own personal insurance, that type of thing. Because it was pretty astonishing to me that, there's that many people out there that don't have their own coverage. They're relying on that group coverage for it.
Yeah, and I mean we're always so focused on the cash value, but the death benefit is important, and all types of insurance death benefits is important, and that stat that 62% are just relying on your group insurance. And let's talk about typical group insurance. We've typically got a flat amount. You could have 25, 50, 100,000. Probably the most common one out there is 1 times earnings or 2 times earnings. So if you're making 100 grand, great. You have $100,000 or $200,000 at work. Okay, great. It's better than nothing. Wonderful. But it's certainly not enough money to provide for your family in the event of death. If you're looking at you're making 100 grand a year and you're going to do that for the next 20 or 30 years, you're going to bring in $2 or $3 million to the family, and then you get hit by a bus and you say, well, I'm only going to bring in 200,000 for the family now, and sorry about the other 2.8 million dollars. So yeah, people are underinsured, but to dig in further on the group insurance, remember, you lose your group insurance when you quit, when you retire, or when you go find another job, or you get fired. So when you leave that employment, you leave your group insurance. And if your new employer doesn't have group insurance, well, then you have none. If your new employer requires medical evidence and you don't pass at that point, then you have none. If you don't have a new employer and you're unemployed or retired, you have no coverage. If there's just a gap in between jobs, you have no coverage. If your next job has a waiting period of 3 or 6 months for you to join the benefits plan, you have no coverage. And you think what that does for someone that's that has people that depend upon their income. So a family situation where somebody has a husband and kids, well, it's not just looking after yourself, it's looking after that family. And all those cases I talked about having no coverage in between jobs, starting a job, unemployed, retiring, that stat shocks me, that 62% would just have group insurance, because group insurance isn't enough, and it's an inferior alternative to regular, whether it be term insurance or permanent insurance through a licensed insurance advisor. So for all you listening, review your insurance, see what you have, and it might be time to update it. Okay, Christina, what do we want to talk about next? We want to get into upcoming podcasts for the month of August. We've got a couple guests lined up that we're really excited about. We've got Simeon Papalilius from Rec Canada. These guys are incredible, just leaders in the pre-construction world in Southern Ontario. So he's going to talk about maybe development charges and what we can do to limit those. We're going to talk about just how to buy a pre-construction, A to Z, step by step, how to buy a pre-construction, what to look for, what to look out for. So that's going to be a great one. We've got Mandy Branham, who's the joint venture queen. If you ever wanted to invest in real estate, but you didn't want to deal with tenants, termites, and toilets, find a partner. And we're going to dig into how we do that joint venture deals. And then we got a few more. Christina, what else are we going to talk about this month?
We have got a podcast on inflation and how to protect against inflation. So you're not going to want to miss that one. Very hot topic right now, inflation and how we can protect against it. So we've got that podcast, and we've got another one on, the best, some of the best places to save or store your wealth. So the ideal places that you want to be saving, which kind of goes hand in hand with that inflation side of things, but definitely going to want to take a listen to those.
Beautiful. Sound like timely episodes. Phenomenal. All right. Well, that's the update for August. Don't miss the upcoming podcasts, and reach out to us if you have questions, or if you have a podcast topic that you'd like us, or an episode topic you'd like us to discuss. Just reach out, send us a message, and we're happy to take requests. That's it for August. Thanks for listening. Have a great day. Thanks for tuning into this episode. Don't forget to like, subscribe, and hit that bell button so you always know when new content is coming out. For more helpful tips and tricks, visit our Instagram, Facebook, or TikTok pages at Control and Compound. If you want to reach out to us directly or work with us, visit our website at controlandcompound.com. The links are in the show notes below. See you next episode.